Okay, so now let's start with that first budgetary resource, the budgetary authority. What is it, right? And I mentioned before, though, it is the legal authorization provided by Congress to federal entities to incur obligations and make payments from the U.S. Treasury for a specified purpose. It's permission to spend money. Now, there are 4 types of budget authority. We have appropriations. So that's where Congress is saying, here's some money to spend for this purpose. That's great. Now you have borrowing authority. It's a little different. It's giving an entity the ability to borrow funds to pay for their obligations. And similarly, contract authority. This is actually letting certain very specific entities enter into contracts before they have those liquidation, the ability to pay. It's a very unique type of authority, which we're not going to go into too much today, but know it exists, commonly seen in like working capital funds. And then you have spending from offsetting collections. So this is more like business-like activity in a way. It's an agency that's able to spend and collect funds for that spending. Maybe they're running a service that other federal entities need, like fingerprints, right? They're charging a fee to operate that service to other federal entities. That's one example. But that's also I would say spending from offsetting collections is the second most common type of budget authority you're going to see, with appropriations being the number 1. Okay. So 4 types of budget authority: appropriations. Now here's the definition we got, from the GAO. It's a law at Congress provides an agency with budget authority. An appropriation allows the agency to incur obligations to make payments from the U.S. Treasury. Appropriations are definite or indefinite. So think of it. They could either say, hey, here's $100 million to do this road, or it can say, you can take this money you need to build this road. The next is borrowing authority. This is authority that permits agencies to borrow funds, and it's typically done from the Treasury, though there's some exceptions, and obligate them for specific purposes. It is often used for programs such as repayable investments, such as loans or infrastructure projects. I'll say one agency that uses borrowing authority is FEMA, the Federal Emergency Management Agency. They have the ability to use borrowing authority. Now we have contract authority. This is budget authority that allows agencies to enter into contracts or other obligations in advance of appropriations, requiring subsequent appropriations to liquidate or pay for those obligations. And like I said, this is a unique type of authority, not seen very often. I know I've seen it in agencies that say working capital funds. Maybe they're building things. They're going to get into this contract authority, so they're able to do that. Or maybe they're repairing helicopters, right? Or airplanes. This is one. And the last is that spending authority from offsetting collections. And the GAO definition for this one is just budget authority that allows agencies to obligate and spend collections that offset their appropriations. So maybe they're doing a service, like I said. Maybe they're doing fingerprints. Maybe they're doing background. Insert whatever they're doing, that allows. It's like, it says fees, reimbursements. I think kind of pseudo like business-like activity. Now, let's talk about the USSGL accounts you'll have here. Now, this is not an extensive list by all means. This is actually only one GL account for each. But you'll see here, 41190. This is an appropriation. Other appropriations realized. Believe it or not, this is probably going to be the most common type of appropriation account you use. The next one is 410. This is current year indefinite borrowing authority. The next one is 413120. Current year definite contract authority. All right. And the last one is 4060. Anticipated collections from non-federal sources. So that's that 4th type of budgetary authority. So let's look at an example in the flesh. You'll see right here. This is from an appropriation for fiscal year 2024. This is for NASA, and this is specifically for the Inspector General. You'll see here the law very much succinctly says, for necessary expenses of the Office of Inspector General in carrying out the Inspector General Act of 1978, $47,600,000, of which $500,000 shall remain available until September 30th, 2025. So this law is saying exactly what's available. Which brings us to our next step, which was apportionments. Now, what is an apportionment? I think I briefly described it earlier, but here's a definition for you. It's a little wordy, I apologize, but it's important to know. It's an action by which the Office of Management and Budget distributes amounts available for obligation, including budgetary reserves established pursuant to law, in an appropriation or fund. An apportionment divides amounts available for obligation by specific time periods, which is usually quarters, activities, projects, or combination therefore. So think of it. It could divide an amount over quarter 1, 2, 3, 4. It can divide an amount over project A, B, or C. Or it can do both. Project A for period 1, 2, 3, 4. Project B for the whole year. And the intent is really to prevent the obligation of amounts in excess of the appropriation or fund and to achieve an economical use of funds from the obligation. Now, what are the accounts you'll see in the U.S. Standard General Ledger for apportionments? You'll see here. So we have 4510-0 for apportionments, and you have 4590-0 apportionments, anticipated resources, programs subject to apportionment. Clear? So now this is actually what you would see for an apportionment. How is it recorded, right? It's an SF-132. Now this is going to be your apportionment, and you'll see here on this they have two sections. You have a top section right up here. We have the appropriation. Specifically, this was for $500,000. So this is for that. Remember, the law said there was that $47 million were available, except for $500,000 that could be remained open until September 30th, 2025. So that's actually a 2-year fund. So you'll see here, this is actually the Treasury account symbol. We can go into this at another time of how to read it, but you see here 2024, 2025. So saying that $500,000 is going to be available to the end of 25. And then down here, this is the second part of your apportionment data. So this is for the Office of Inspector General direct programs. Now, what OMB did here was give the entire balance of that $500,000 available anytime in those 2 years for that program, which is the entire Treasury. This is the entire fund. But it could have divided it up over periods, could have subdivided it into further details. It didn't, but that's how you see an apportionment. And you can find these apportionments at the apportionmentpublic.max.gov. Okay. So after apportionment comes allotment. And what is an allotment? Well, it's an authorization by the agency head or another authorized employee, and it's pursuant to the specific procedures established by that apportionment requirement stated in OMBA 11. All of this is just to say that after OMB gives an agency their funds, their budget to spend, the agency gets their chance to chop it additionally if they want to, right? It's just administrative control over funds. So what are the allotment accounts that you'll encounter? You'll see here 4610-0 and 4650-0. You have allotments realized resources and allotment expired authority. Now, after allotments comes commitment. What is that commitment? Remember I said this is kind of like putting money aside for an expense that you're planning to do? Well, it's an administrative reservation of allotted funds or other funds in anticipation of their obligation. All that to say is you're putting money aside for an expense you think you're going to do, but it's not legally binding. Remember that, it's not legally binding. A lot of times agencies, as they have their own methods of procuring and internal controls, is you'll make sure you have funds available to commit, and they'll check that. And once they commit it, you kind of take it out of your allotted amounts so it can't be used. And then you'll do your due diligence, find what you're going to spend that money, but your commitments will be there to fund it. Now, what are your commitment accounts? So you have a good old 47-0, which is your commitments, programs subject to apportionments. And then you have your 47-20-0, which is your commitments, programs exempt from apportionment. Now, after commitments come obligation. Now, this is your definite commitment, which I know the definition confuses me sometimes just saying that. A definite commitment creates a legal liability of the government for payment of goods or services ordered or received. Just think of this. To me, it's you're signing a contract. Somebody's doing work for you. You have to pay. That's an obligation. Some of the examples you'll see, a contract, I mentioned that before. You're signing a contract to build a road, to improve some type of infrastructure, or maybe just provide landscaping services or guard services. Another type is grant awards. Those are going to be obligating. Once the grant is awarded, obligated. And then I say purchases. You have government purchase cards. You're swiping the card. That's creating obligations, right? You receive the goods, you still have to pay for it. Now let's talk about our obligation accounts. So you'll see 4 of them here, which really kind of divvy up into 2 groups. But we'll have 48010, which is your undelivered orders, obligations unpaid, and your 48020, undelivered orders, obligations prepaid. Then you have 4901, delivered orders, obligations unpaid, and you have your 49020, your delivered orders, obligation paid. If this is confusing, I have a way to help get it a little less murky, and I call it the obligation life cycle. And we have a little matrix for here. Just think of an obligation. There's 2 things you need to know. Has it been paid or is it unpaid? And has it been delivered or is it undelivered? So if it's unpaid, undelivered, it's 48010. Now if it's delivered, paid, it's 49020. And I always think of it as ultimately you're always going to be kind of moving. You start off with this 48010 for almost 90% of your time, right? And then you're going to be moving over to your 4902. That's where you're eventually going to go. If you have a prepayment, then it goes over here. Or maybe you have your contract. Let's say you have your monthly contract for landscaping. They come out, they do the work for you for that month. So that month's amount is now actually, it's been delivered, right? But it's unpaid. You haven't paid that invoice yet. And then once you pay your invoice, you move to the 4902. So that to me is a great way of thinking of how our obligations, handled. Okay. So we covered a lot there. I really want to hone in on 2 key points though. So just one thing to remember is for the budgetary life cycle, it flows. Think of this: appropriation, apportionment, allotment, commitment, obligation. And each of these stages get progressively tighter in control of how the funds can be used, right? They're restrict. Remember, these are budgetary controls.